Hello, good morning everyone. This is Cynthia Yañez from J de Rio, and I'm going to be here to talk about our newest webinar that we have prepared for you. And we're going to be talking about relevant aspects of the 2017 tax reform. As you know, each year our legislators are obligated to deliver the tax package, the tax regulation package for taxpayers to comply with during the following year. So this time, the tax package was delivered on November 30, 2016, and it included some modifications to the value-added tax, income tax, and as well as the federal code. So the objective of this webinar is to inform you of the main changes that are applicable for this 2017. So we're going to start talking about the value-added tax law, and this law is including a new provision, a new section to Article number 5, which talks about pre-operation period. This pre-operation period is something that has occurred always in the past, but now it has been established on the value-added tax law, and it actually is adding a procedure for taxpayers to determine VAT during this period. So what is this definition that has been included on the value-added tax law? Is it says that pre-operation period for VAT purposes is the period when investments and expenses are carried out prior to the beginning of the activities of the company that will be subject to VAT. So this means, and the authorities also understand, that there's a period of time on which companies are generating expenses and investments in Mexico, but on the other side, they still do not have revenue for those operations. So they recognize that this period will usually take up to 12 months. It says the pre-operation will have a maximum duration of 1 year, and it shall begin upon filing the first application for refund of the value-added tax. So the authorities are contemplating a one year period, but there's also the possibility that if the company estimates that taxable activities will not begin in a 1 year period, then there is the option of filing a free essay to explain why the pre-operation period will take longer than what the authorities have determined. There are two ways in order to credit the VAT during this pre-operation period, and the first one is, it's section 1. It says VAT on expenses and investments on pre-operation periods may be credited during the first return where the taxpayer performs the activities. So this will be having to wait until operations are starting in order to credit all this VAT for expenses and for investments. However, the authority recognizes that there can be some update due to the inflation of this VAT paid. So if we go with the option of section 1, we will have to wait until operations have started. It can be in a 1 year period, which is the regular time established, or if the company is able to start operations sooner, let's say on the 8th month, then the company will file a letter to explain to the authorities that they are going to actually start operations on that period. So On that month's return, the company will get to credit all of the VAT paid during day one until the time that they are starting their operations, and they'll get the inflation of those VATs on expenses and investments. Now, the option number 2, which will look more viable for companies, is to request a refund of all the VAT paid for investments or importations on the following month when they have been incurred. And this will bring in favor to the company that they are able to recover their cash flow sooner. However, this will bring other requirements that I'm going to talk about in a moment. But here, what we have to take into consideration is that if the company, for some reason, does not start operations on the 12th month, they will have to return to the authorities all the VAT that has been refunded during this period, plus inflation, plus late fees, according to the general rules. So this is something to take into consideration. If you expect to really start operations before the 12th month, then we will recommend for filing the refund of each balance on a monthly basis, rather than having to wait, as in option 1, to start operations and then file just one balance in favor. Also, this request of refund that it's going to be filed on a monthly basis, according to option number 2, is based on an estimation of the crediting factor ratio. All VAT will be creditable, and this is for all companies, depending on the proportion or ratio of your taxable activities. Let's say that one company has all taxable revenues, and by taxable I mean 16% or 0%. If a company has 100% of taxable revenues, they'll get a 100 credit of their VAT paid to vendors, suppliers, or by importations. But if a company, on the other hand, just has tax-exempt revenues, then they don't get the credit of the VAT. It can be the case that a company have mixed revenues. Let's say 80% are taxable and the other 20% is tax-exempt. So in this case, the companies will determine a profit ratio for crediting that will only correspond to 80%, because you only get to apply credit of VAT on taxable income. So this month-by-month return will be based on an estimation that if after the 12th month, I'll talk about it later on. So for this option number 2, which is to request the balance in favor on a monthly basis, these are the procedures that the company has to do, which are not very different from a common VAT refund. They have to file the electronic request through the electronic format. However, we have a slightly different format, which is VAT for pre-operation period. But maybe it's just to point out that it's pre-operation period, but all the guidelines are pretty much the same. And it also says that it should be filed in the month following when the expenses or investments were paid. So Here we have a couple of additional information that the company needs to file along with the first VAT refund. And it says, for one, as additional information, the companies going for these options should include a file with the estimation and description of the expenses and investments to be made during the pre-operational period. They should also include an estimation of the proportion of revenues that are going to be taxable and exempt. Most likely, all companies have all taxable income, so it should be clear to demonstrate that the VAT credit should go for 100%. Then also, as additional information for the first refund, they should include if there are any finance mechanisms, and as well as the estimated time to start performing the operations. Another benefit of filing this type of refunds is that usually all these investments in pre-operation period corresponds to fixed assets. If that is the case, then they have an additional benefit of receiving the refund in 20 business days, compared to a regular refund, which we know that it's a 40 business days period. So it's something to also take into consideration for this pre-operational period. Now, I was mentioning before that the crediting during this pre-operation period, it's going to be made based on an estimation of your taxable and exempt activities. So by the time operations starts, which should be the 12th period, there needs to be a comparison made between your estimation of taxable items versus your real taxable and exempt activities. So it's okay, the authorities understand that there might be variations between the estimation and the actual level of operations. However, they have a 3% margin. So if by the time the companies determine this comparison, the VAT in favor decreases, then the taxpayers shall refund to the authorities all the exceeded amount plus the surcharges. However, on the other side, if according to your real operations you have a higher level for crediting, then you should be able to credit the difference or request the refund of such difference plus the updated factor due to inflation. So it's important to take into consideration that this estimation of taxable activities should be as close as possible, because as mentioned, there's only a 3% margin for you to fall over or under your estimation. Now, as I was mentioning before, taxpayers need to give a notice to the authorities as to when they're going to start with their activities, and this is in order to identify the month when the corresponding adjustment that we just talked about needs to be made. It says that taxpayers shall inform the authority as to the month they begin their activities through the format 9 for VAT, start of operation notice. So the authorities can expect the adjustment on the VAT in case that the difference was over or under the 3% that we just talked about. Now, With this new section that was included on Article 5 for the VAT law, there came a transitory provision, which are usually used to provide extension or to delimit the approach of the new rule. In this case, the transitory provisions on the Article 4 tell us that regarding the modifications to Article 5, the crediting of the tax during the pre-operation period carried out until December 31st, 2016 shall be executed in accordance with the provisions in form as of said date. So this means that companies that started their pre-operational period in 2016, they can credit the VAT in a monthly basis as every company do. These new regulations of having to demonstrate your estimation and all this that we just talked about is for companies that are starting in 2017. Now, in addition to this amendment, there is another addition in the VAT law which came in Article 29, which talk about operations that are going to be considered exportations. And what is the benefit of an activity being considered exportations? Is the fact that they are taxed with 0% VAT. Now, as we just talked about, being taxed with 0% VAT should mean that the company will get full credit of the VAT. So it's different than being considered tax exempt, but it's rather taxed with 0% rate. So there is new export assumption added to the Article 29, and therefore it can be taxed at 0%, and it is referring information technology services rendered by residents in Mexico, and the benefits of these technology services are enjoyed abroad. So what are the operations that fall into this new category of exportation? It consists one in the development, integration, and maintenance of computer applications or computer systems. It also can be processing, storage, information backup, as well as database management, hosting computer applications, optimization of information security systems, and providing continuity in all the operations mentioned before. However, there are some requirements in order for this type of operations to be considered with 0% VAT. And this is where the authority goes really deep into verifying that the services are in fact provided in Mexico, but the beneficiary is someone that is abroad, Mexico. For example, one of the requirements, it says that the use of technological infrastructure, human and material resources are located entirely in domestic territory. It also says that the IP address of the electronic devices through which the service are rendered shall be in domestic territory as well. So this goes really into technological information. And also it points out that the IP of electronic devices of the service recipients and its internet service provider shall be located abroad. So somehow companies will need to demonstrate this in order to get the 0% taxable rate. It also says that the tax receipt shall contain the tax ID of the resident abroad who engaged and paid for the services. So this is really not a complication. All Mexican taxpayers are used to requesting tax ID of whoever they have operations with in other countries. So this does not represent like an additional burden. And then the fact that payment shall be made through electronic means, electronic transfer or something like that, and shall be sourced from financial institutions located abroad. So this should also be no additional burden. I think it's something that taxpayers can comply with very easily. Now, there are two exceptions on which this type of services will not be considered exportations, and it says that when virtual private networks are used to provide the mentioned service. So what does it mean? It says that, okay, remember that we just talked about that the IB has been located from a Mexican supplier. Okay, there are some cases in which there is an extension of a local network to be accessed anywhere else from outside Mexico. So if this happens, this means that the service is not really provided in Mexico, so therefore is not considered an exportation. And then the other case is that when information technology services are provided, they apply to goods located in domestic territory. Okay, the IP is in Mexico, the payer or the contractor of the service is abroad, the IP of the beneficiary is abroad, but somehow the benefits apply to goods that are physically in Mexico. So this case is also not considered an export, so it should not get the benefit of 0% VAT. Now, we are going to talk about the most mentioned amendment to this new set of rules, and it's in regard of labor subcontracting. As we have seen during the last couple of years, maybe we have not had a tax amendment or tax reform per se, but we did notice the authorities going after or very scrupulously reviewing taxpayers who use labor subcontracting. And the reason for it is because this is a type of operation that has tended to have bad practices. The authorities have explained in multiple occasions that they can track the VAT that has been paid for these service providers, and that's a reality. So most of our clients have faced problems in VAT refunds because tax authority was refusing to reimburse payments made to these labor subcontractors, and in most cases it has been given the obligation to validate VAT payment to the company that is hiring those services, as maybe most of you have seen. So for this year, 2017, we have a couple of amendments or inclusions into both the VAT or the income tax laws that include the following. For example, as you can see off the left, we have the new obligations that appeared on the value-added tax law. And it says, in order for VAT on expenses for rendering services implying labor subcontracting to be creditable, the contracting party, which means you or whoever who is hiring the services, shall obtain copy of the following information. Now, this information that I'm going to describe needs to be delivered to the contractor on the month that the payment was made, and it corresponds to the following. 1. The return of the transfer VAT of the contracting party. So, as you know, all companies in Mexico are obligated to file monthly VAT tax installments. So, whoever that's hiring the services of a subcontracting party, they need to request on a monthly basis, okay, show me your VAT payment. Show me your VAT refund, and also show me the proof of payment of VAT to the tax authority. So not only do we have to get the copy of the return, but the proof of payment to the government. And also they created a new informative return, but this is only for the company rendering the service, in which they need to include the value-added tax transfer specifically by the contractor to each of its clients. So let's say that we hire one company for subcontracting, then that company also provides services to 20 other companies. They need to file a specific return saying, okay, in my VAT return, I paid 10,000 pesos. Okay, this was paid on behalf of this and this and this taxpayers. So at the end of the month, all this information shall match. Therefore, the companies hiring the services will not be able to credit the VAT. And what happened in the past? Okay, maybe if you go to a tax reform process, during the review of the authorities, they will ask you this information, but in the meantime, you get to credit the VAT. You have the benefit of the doubt. But with this amendment, what happens is that it's very clear that if you don't get this information every month, you should not credit this VAT on your tax return. So it's actually avoiding that part of having to request this in refund to the authorities, so they are saving that part. They are avoiding those problems, and they are leaving it to the taxpayers who hires the service. Or on the right, we have the amendment on the income tax law, and we also need to get another couple of documents, and this is to demonstrate the deduction. The first one that we talked about was to demonstrate the credit of the VAT. This is going to be to demonstrate the deduction. And besides all the three prior items that I mentioned, we need to get copies of the wages and salaries receipts that are delivered to the employees. This is the payroll receipt that we know, but since everything is electronic, now we have a CFDI for wages and salaries. So this is what we need to get per every employee that is working for us through the labor subcontractor. We also need to request to them copy of the return for the income tax withholdings that they have to pay because they are their own employees. And we also have to request copy of the employee and employer fees to the Social Security institution. So normally this will be information that we don't have access to, or that we in the past didn't have to receive, but now it's the obligation of the subcontractor to provide this on a monthly basis. So now this could have caused problems with you in the past, but now they are forced to give it to you. And what we have seen with some customers is that the service providers are developing like a website or a page available in which they can download this information on a monthly basis, so they can have access for it every month. So now we are going to start with the income tax modifications. These are, I will say that the most important one is in regards with labor subcontracting, what we just talked about, and the other are few items or on few different subjects that we will now discuss. Now, this income tax law was also published or delivered on November 30, 2016, and it's applicable starting January 1st, 2017. So we have a new requirement for non-for-profit companies. These are type of companies that do not have any lucrative activities in Mexico. So they say that the federation, federal entities, municipalities, and institutions under the obligation to hand over or pay to the federal government their operation surplus, they'll need to issue a CFDI for the contributions, revenues, and income they collect, or for any stimulus that they grant. And also, they need to request CFDIs when payments are made to third parties or suppliers. So in the past, this type of non-for-profit companies, they were not obligated to issue or to request CFDIs, but now, as every other company do, they will have these obligations. Now, as I was explaining about transitory regulations, we have the second clause, which establishes an extension or a term of 4 months for the compliance after the obligation becomes effective. So, if this new income tax law becomes effective on January 1st, this means that on May 1st, this type of companies will be fully obligated to comply with this because of the extension on the transitory regulation. Now we have a couple of amendments regarding non-deductible expenses. So here we have an addition to the Article 28, which is which establishes all the non-deductible expenses. On Section 13, it says it allows a deduction limit for an amount up to 285 pesos per day in the temporary use or enjoyment of electrical automobile. So, in the past, we used to have a regulation that allowed the lease or use of enjoyment of vehicles up to 200 pesos per day. So that will total 6,000 pesos per month. But now the addition, and that regulation stays. If you want to lease a vehicle, you'll get a monthly deduction of 6,000 pesos. But if you want to lease a vehicle that's electrical, you get an additional deduction or an increased limit of 285 per day, which totals 8,550 pesos per month. So we see a difference of almost 2,500 pesos. That will be your difference in deduction for leasing a regular car versus an electrical car. So it's something to, if you have this situation, it's something that you can consider to increase your monthly deductions. Now, in regard of deductions of investments, which could be fixed assets, we have an addition as well in Article 34. We have the addition of the Section 14, which established a maximum tax depreciation rate for conventional bicycles, electrical bicycles, and motorcycles that corresponds to 25% per year. So this deduction limit, tax depreciation limit, was not existent in the past. So now we have the certainty that this type of vehicles or method of transportations can be deductible at a 25% rate per year. Also, on the Article 36, which is in regards of vehicles or methods of transportation, in 2016, we had the limitation of depreciating regular vehicles up to 175,000 pesos. So all regular cars or vehicles or trucks that are not for passengers or pickup trucks, those are deductibles only 175,000 pesos. Now, if you buy electrical vehicles, you get a deduction of 250,000 pesos. So here we really see the difference in the authorities wanting to improve the environment by allowing additional deductions for vehicles that are electrical. So it's something that you can consider as well when purchasing a vehicle for the company. Now, there was a new whole chapter included on the income tax law, which is chapter 7, that it's going to talk about an option for accumulation or accruable of the incomes for companies in Mexico. So this new chapter in Article 196 established an optional procedure for determining tax revenues. And the requirements are that there need to be corporations formed only by individuals. As you know, in Mexico, we have 2 shareholders or 2 partners, stockholders per company, and it can be either another company or an individual taxpayers. So in case for companies that are formed only by individuals, they can determine their tax revenues according to this chapter. And also another requirement is that these companies choosing for this option, they do not exceed 5 million pesos revenues during the prior year. Of course, this is for companies that are only starting in Mexico, so they'll need to have an estimation of their level of revenues, and if they estimate that they have less than 5 million pesos per year, they can go for this option. Also, there's a limitation that the shareholders that participate in these companies that are new in Mexico are not participating in any other companies. So we have to take a look at these 2 requirements in order to see if we can go ahead with these benefits. And what are the benefits of falling into this situation? Okay, it's the accumulation of revenues or taxable revenues and deducting expenses are based on cash flow. As you know, regular companies, they have 3 moments for generating tax income, and one is when the invoice has been issued to the customer, whether it's collected or not. 2, where the service has been rendered, whether you have an invoice or whether it has been paid or not, or when the fees for such services have been collected. So in regular companies, we take a look at one of these 3 times. So not really if the income has been received in cash or in the bank statement, they have to be considered taxable. But with this new scheme, with this new format, all revenues and deductions are going to be cash flow based. Then another benefit is instead of considering cost of goods sold for the raw material or finished goods that are purchased, the company it's going to deduct the purchases for this type of inputs into the companies, and they will deduct them when they are effectively paid. On the other hand, the cost of goods sold, you get to deduct this type of items when the sale has been made. So there's a difference in the moment in which you are incurring in the expenses versus when you get to deduct. And in this situation, everything will be cash flow based. Also, these companies that fall into this situation, they do not determine annual inflation adjustment. So this is something that we see on every other company. You either get an inflation taxable or deductible depending on the level of financing of a fish company, but this type of companies will not be obligated to do so. Now, in order to determine tax installments, they have the option to file them considering income minus deduction times the income tax rate, which is 30%, versus the regular way, which is all your revenues times the profit coefficient that you probably know, that's determined based on the prior year, times your income tax rate. So this is something that the taxpayers can choose, either pay installments the regular way or pay installments on incomes minus deductions. For this type of companies, annual taxes will be filed the regular way. So really the benefit is during the tax installment to do not disburse as much money and have it to pay really at the end when you're filing the tax return. Now we have another provision that talks about aids or stimulus that are given to taxpayers, and it says that economic or monetary aid received by taxpayers through governmental budgetary program shall not be deemed taxable. So in the past, there was always this controversy that, okay, this type of programs or this type of stimulus should be taxable or not. So in this case, income tax law is establishing that are not taxable. However, there are a couple of requirements in order not to consider them as taxable. So it says the source shall be from programs with a beneficiary registry and rules of operations. Also, this benefit or grant should be distributed to an electronic transfer. Every taxpayers that receive these benefits shall comply with the obligations depending on any program. Also, such taxpayers should have a favored tax compliance opinion when the authority requests this. And also, it brings out the clarification that the expenses that are paid with the economic aid or subsidy should not be deductible either. So what happens is, okay, with the money that is being delivered to the company is not going to be taxable, then neither of the expenses paid with that money it's going to be deductible. And here it's important to pay attention that since the expense will not be deductible, it means that the VAT paid for those expenses will not be creditable either. With this new provision, the authority created 3 new tax stimulus that are very specific, and I'll discuss very shortly. For example, we have on Article 202, which is a new article on the income tax law. It's a stimulus for research and development technology. This corresponds to this subsidy corresponds to 30% of the on the base for the expenses and investments made during the corresponding fiscal year. So what happens is that companies filing for this subsidy will have to demonstrate their 3-year average level of expenses, and if there are shoes for the subsidy, this corresponds to 30% of the expenses incurred per year. Now, this benefit will not exceed 1,500 million pesos per fiscal year and should not exceed 50 million pesos per taxpayers. So this is the maximum amount that has been authorized by the authority to deliver to taxpayers who can demonstrate this type of investment in development and technology. Now, the second stimulus, which is Article 203, it's regarding high-performance sports. It says that they'll get a benefit or a credit up to 10% of the income tax generated in the prior fiscal years for companies that demonstrate the increase of the infrastructure to practice high-level sports or to benefit Mexican athletes. This is they need to support projects or investments to sport places that are exclusively for Mexican athletes. So these benefits shall not exceed 400 million pesos per year or to 20 million pesos per taxpayers who demonstrates to comply with this type of investments. Now, the last stimulus that we have is in the supply equipment for electric vehicles. This is a subject that we see all through the amendments of the income tax law, and the stimulus is 30% of the amount of the investments performed under this project. And the requirements for this is that all this supply energy for this type of vehicles need to be in public places, so everyone can have access to this supply of energy. If they comply with this, they can get this benefit. And the idea of this is also to take care of the environment, so that's why the authority is creating this type of benefits. You can clearly see that they wanna improve, or they wanna give an advantage to the persons using electric vehicles, or to reduce the amount of carbon dioxide on the environments. And they'll also want to increase the level of technology resource in Mexico that can compete to a world stage. And also they want to increase the performance of the athletes that represent Mexico. So that's the overall reason for the authority to create this stimulus. Now, in a general way, all these stimulus are applicable against the income tax payable during the fiscal year. Is not taxable, as we just talked about, and shall not be applied together with any other tax benefits. Also, it's very important that since they are limited amounts, and it has to be granted through an interinstitutional committee integrated by specialized entities, such as a member of the economic ministry and if it's the sports stimulus, then one of the persons is in charge of the sports organizations in Mexico. So really have an interinstitutional committee. Also, more general aspects of this is that if this benefit exceeds the income tax for the fiscal year, then the difference can be credited against the income tax payable for the following 10 fiscal years. If the taxpayer does not apply the credit when they have the opportunity to do so, they will lose their right to credit, so very similar to a tax loss. And it also says that during the month of February of each year, they'll file, the persons who get this stimulus, they'll need to file an informative return providing detail as to the expenses and investments made with that money. And really important, it needs to be validated by a registered public accountant. And that is because they really want to see the application of this money go to these specific causes. It's not just about receiving money and using it for somebody else. Also, having a computer system that's available for tax authorities whenever they want to show up and review it. Now, another part about authorized donees. There was a limitation for companies that wanted to be authorized donees that 10% of their revenues could be for other activities than the main object. However, they are making an amendment to specify that the recovery fees are not included within this 10% limitation. So it actually opens the door for the donees a little bit to increase their donations and receive from other type of donors. Also, it says that are not considered taxpayers the institutions dedicated to charity or to help out agriculture producers or craft makers, people located on the areas of the companies that are the most behind. So they are considering these not taxpayers in order to generate more jobs in those areas and hopefully bring out the level of growth those places. Now, there was a modification to the requirements to be considered an authorized donee, which I'll mention very quickly. It says that in case of change of residence, the destination those donees need to destinate the entire of its real estate to any other authorized donee, which means they cannot sell it, they cannot pass it to an individual, they'll need to donate it to another donee. They have a 12-month more periods to renew their authorization. Otherwise, they need to also destinate to other donees any donations that were not used up to that moment. It says that it should be an automatic cancellation of the authorizations if they fail to demonstrate the application of the donations. And also, and this is new and it's also very important, they shall have structures and processes for a corporate government for management and control of the company, which in the past was not a requirement, but now it's important to have this type of a structure that can support that the donations are being used according to the object of the company. Also, there is a new voluntary certification scheme, which is for companies, for authorized donors to be more transparent or more beneficial, which consists on letter A, double A, or triple A, and as more A's that a company have, it means that that donee is more transparent or have more benefits. Now we're going to move to our final item or final regulation, which is the Federal Tax Code, and it says that CFDIs, you know that all taxpayers carrying out transactions, they need to use CFDIs, okay? Now, they may only be canceled when the person in favor on whom their issue accepts the cancellation in accordance with a procedure that's going to be established. So what happened is that you had an operation with a supplier and they issued a CFDI that support that deduction for the payer. But we saw, and it was the case of many taxpayers, that within a couple of months or so, or within the following year, those CFDIs were canceled out of nowhere and out of the blue. So companies had to request a new CFDI to those suppliers. But what happens is, if you don't notice, then your deduction will be unprotected because the CFDI that you had is not valid anymore. So what does it mean is that now in 2017, if someone wants to cancel a CFDI that has given to you, they'll need to ask for your authorization. So this is a way of securing that your deductions will have a CFDI. And this will be applicable as of May 1st, 2017. So the service providers for CFDI have enough time to make necessary changes. Now, in regards with electronic signature, that's on the right. Well, we know that the electronic signature, it's a way to authentify the person behind it, or to certify the good faith of certain documents. So now, but this electronic signature was only used for tax purposes within the tax authorities. Now there's going to be the option for individuals to choose to sign other type of acts with the electronic signature. In order to do this, they should request to the tax authorities the verification and authentication services for those certificates. So it's like the electronic signature will be more like common use, not only for the tax authorities, but if anyone wants to, they can use it for common use. Now, the tax mailbox on the left, which is the vehicle or the place in which right now the authority is giving us any notification, such a requirement, such an approval of VAT return. Any notification goes to the tax mailbox, but this is something that was only federal. Now, the state authorities or the city authorities can deposit notifications to the taxpayers in the tax mailbox as long as they get the approval for taxpayers. So it seems to be that we're going to be receiving a little bit more information on the tax mailbox. Now, in regards with registration of legal representatives in the taxpayer registry, there is a new obligation for legal representatives of a company to be registered as a taxpayer before the RFC, which is the Federal Taxpayers Registry, in order to have a certainty of their identity. This is similar to the electronic signature. They really want to verify the person that's acting as legal representative, and this is because there has been bad practices, there has been bad use of the figure of the legal representative, and also there has been the cases in which one person is legal representative for 50 companies. So that really shows something to look for. So that's why the authorities want to have their tax ID available in order to have the information on their systems. Now, another information, notary public or brokers shall record on the registration deeds the tax ID or the tax ID for the partner or shareholders, as well as a legal representative. So that's something for new companies that are incorporated. Then we have a couple of infractions or penalties that are included on the tax code that we did not find them in the past. And it says that if a company does not comply with the technological specifications established by the authority when issuing a CFDI, which is or tax invoice, they are going to have a fine from 1 to 5 pesos for each CFDI that has been sent. So here, maybe the penalty seems pretty low, from 1 to 5 pesos, but we really have to take into consideration the amount of requirement per each CFDI. So that's why the importance of having an accurate CFDI, more so because it's the document that supports our tax deductions. We have some penalties also that are dedicated to the donees, to the new requirements that we just talked about. When they do not use their entire state or the corresponding donations, they should have a fine from 140,000 to 200,000. When they fail to provide information mentioned in one of the articles, or when they fail to file the transparency report, they should also have a fine from 80,000 to 100,000, or maybe the cancellation of the authorization. So this is specific to donees. Now, in 2016, the tax authority established with the electronic reviews or electronic auditings. So there was two amendments to those guidelines or regulations. It was established that when the authorities came at your door with an electronic audit, they will have a pre-settlement or a pre-liquidation liability that they had already estimated in their systems, and it could only be revoked through providing a lot of information. So now, in this new phase of electronic reviews, we are not going to have a pre-settlement or a pre-liquidation file. So, okay, they might do the reviews electronically, but they will ask for information rather to have a pre-liquidation. And also, they establish a limit of 6 months in order to finalize their electronic review in case of a tax audit, and 2 years in case of foreign trade. These type of reviews usually take longer time, so it's totally normal that they're given a little bit more time for foreign trade reviews. Now, in regards with labor subcontracting, we have an amendment to the Jalisco Revenue Act, which is the specific, sort of like the income tax law, but specifically for the state of Jalisco, that goes really hand to hand with amendments regarding labor subcontracting. But this is about the state payroll tax. As you know, depending on where the employees perform their services, they can be either tax 1, 2, 3% state payroll tax. So in Jalisco is 2%. But what they're doing is that asking the company that hires the services from a labor subcontracting to withhold the payroll tax to the service provider. It says, persons receiving the rendering of services by a third party shall comply with the following: withhold the tax, and this is payroll tax, which will be the 2%, generated by the provider of personal services and transfer it to the state authority. Also, they have to submit a registration as withholders, and they should issue a receipt for payroll tax withholdings. So what is the state of Jalisco doing? It's having you to act as a collector from the authority, because you're going to collect from the labor subcontractor and pay it to the state of Jalisco. So they are going one step ahead and making the person that hires the service having to withhold the service provider. And they also establish a calculation, and it says that the service provider shall report within their invoice to you the total salaries and markup charge, and the 2% withholding shall be made on the total salaries. It also says that if the service provider does not give you this information, the invoice total shall be multiplied by 90% and then apply the 2% rate for payroll tax and delivered to the authority. So this payment needs to be done on the 12th business day of the following month. So, and this is something that is effective right now. So if you have a subcontracting party in the state of Jalisco, I will recommend contacting our payroll department as soon as possible, as to see if you have enough information to comply with this. Now we have reached the end of this webinar. If you have doubts, comments, or if you have any questions, please send them to our client success email, and you'll be directed to the person that handles your account and provided with the answer. It has been a pleasure giving this webinar with you regarding tax reforms or amendments to the VAT law, income tax law, and tax code for 2017. I hope that you have find this useful, and also just to remind you that this webinar will be available on our webpage to hear and to see if you have specific questions, or if there's something that you wanna take a look again. Thank you very much. Have a nice day.